We're live. Hi, Elana. Welcome to Venture with Grace.
Hi, thanks so much for having me. I'm stoked to be here.
I am such a big fan of your, amazing content on the internet, and I feel like you're such a go-getter. I want to start with your early on in your career. I feel like you made the biggest jump from like being at like Deloitte, like KPMG to like in the Web3 community, and like now you're running a successful venture firm and syndicate. Why don't we start with like what were some core lessons that you've learned early on that you kind of took to run your own fund now?
Yeah, so I guess for anybody who's trying to really jump in a venture, I'd say do the job before you have the job. And I think venture, it's almost really easy to do that because if you have good deal flow, almost any single venture firm will look at your deal flow, want to invest, make you a venture partner. And so for me specifically, I did make a pretty big jump. I was working in consulting, switched to a startup that's a unicorn out in LA. And on the side, I was just investing my own money, so investing between $1,000, one of my biggest deals was closer to $50,000, but into different startups. And then I realized okay, it helped me really learn about the startup ecosystem and learn what I was doing. So then when I met Drew Austin, the founding partner of Redbeard, he's like, hey, if you start sourcing deals, I'll give you carry. And so I just kind of started doing the job before I even started full time. And I started spending all my nights and weekends finding different deal flow, sending them over to him. And then in turn, I'd get carry for some of the deals. And it was pretty quickly that he's like, oh, wow, you're finding this great deal flow. I'll bring you on full time. And so for anybody, that's something that I learned really early on, especially for this world where a lot of it's like networking and who you know. It's, yeah, do the job before you have it. And then the other thing that I did was kind of any single networking event or anytime I had the ability to meet somebody new, it's like always say yes. And then it comes a point in your career when you're like, all right, I need to start saying no. I need to buy back my time. But when you're still young and it's early on, I'd say go to all the events, meet everybody and anybody that you can, because you never know who's going to open a door for you.
Totally. I feel like you're such a go-getter, and I feel like the energy just connect when I watch your content. I wonder, how do you even discover Web3? Since I feel like, well, it was pretty big back in like 2021, 22, and like I was a huge fan of the space too. But since like I feel like I don't know how other people kind of discover it. How do you kind of get into it? And then why do you decided to like make that your niche?
So I was always an investor, especially in the public markets. I remember I had my bat mitzvah and I had like $150 and everybody wanted the new iPhone. And at the time, nobody had the iPhone. And I just gave my dad $150. I'm like, Dad, buy me Apple stock. Like all my
Oh,
friends want the Apple. Like I want this. And this is back in like the seventh grade. And so from there, I always would put kind of all my savings into stocks. And at the time, and this is back in like 2018, crypto started becoming really big. And so I put just a portion of my money in a crypto to try to get some diversity in some of my assets. And that's when I kind of opened up the doors. And then there was actually in real life minting out in LA. And my friend was part of the gallery that was doing it. And so I went and I had no idea what this was. This is, I think, like late 2020 or early 2021 before it like really blew up. And we went to the beach after, and I just started asking him every single question about this. I'm like, all right, people are obsessed with this, as people would call it, a PDF. Like, why do people want NFTs? What is the point of it? And I remember we sat there for like 3 hours, and I was just like trying to learn about like this new asset that I just didn't understand. And after that, I kind of just grew obsessed with the space, and not just like the NFT phase, but crypto as a whole, startups building on top of crypto, what that means for us and how that could change the way that we learn, the way that we get rewards for different companies, and the way that we have our digital identity. And so that's kind of how it started. And then I'm such a learn by doing type of person. And so I just started posting on Twitter. My first post ever was I learned by doing. So here I go. And I just kind of jumped into the space, and everything that I grabbed from the space, I kind of would just tweet out. And it
mhm.
just really resonated with people early on. And then from there, it allowed me to get a following. And in turn, I think that just helps with venture because it allowed me to reach out to any single founder that was super interested in or investor. And usually I'd get a response and be able to talk to them or be able to invest in the company if I got a response from the founders.
For sure. I want to also dive into a little bit on like the audience building before we jump into the Syndicate masterclass. So I feel like I kind of did the same thing, but on LinkedIn. So like in the Web3 space, but it's kind of like I think my early on content was like, oh, here's like 3 news in the Web3 world today. But what's your kind of like content strategy or like also building an audience on Twitter? I feel like obviously you have like a great presence on Twitter. How do you kind of like dedicate time? And then like I feel like a lot of it were also like engagement. I think at the very beginning, I will also like engage with like everybody.
Yeah.
But I think like when it gets to the point, I'm like, oh God, it's like the engagement is creating. I think someone told me like a internet guru, which is like another like social media influencer. Basically, like they told me like you need to spend 95% commenting on other people's posts. I think I did that for a while, but I'm like, oh my God, that's really exhausting because I feel like that's basically creating content every like minute. How do you kind of like think about the content creation versus engagement versus like actually building a presence?
So early on, I would overthink every single tweet. My partner on my phone would definitely say, like, I would not retweet anybody. I was so specific. I wouldn't post unless, like, I probably spent like an hour on each post, tried to post like the twice a day that I've heard you should do. And I was
Yeah,
able to grow a following, especially as Web3 went up and I was posting about it. It helped. Now I am so bad at Twitter. I really just wrote to somebody on my team. I was like, I just don't understand Twitter anymore. I had a post go viral yesterday on LinkedIn, got like over 1,500 likes, like whatever, so many reposts. I
oh,
posted the same thing on Twitter and it got like, the thing is it got like 10 likes in a span of like a minute. And then I'm just in Twitter jail and it got absolutely nothing. And so I think it's really hard. But I think what I've learned is like, if you're able to get the following, like now I have close to 30,000 followers.
congrats.
Thank you. But now it's like, it doesn't really matter to me as much to get any more followers because now it's like, hey, you have the followers. So people like have this almost layer of trust to you. And now it's like I could do the outreach that I want to do for ventures. So for me, it's not really about the following necessarily or the number. It's building that trust with the audience so that when I want to reach out to a founder, when I want to reach out to an investor, I usually could get a response like 70 to 80, sometimes 90% of the time. But if I didn't have that following and I was like a few hundred, I just don't think people would be as inclined to answer me. And so I do it just to become a better investor. And I think it's really important to have a voice in whatever that platform is for you. And right now I've kind of switched over to LinkedIn. And as you probably feel, there's such an ability to get a following there. And I think it's so important. And I've been able to grow really fast on LinkedIn, given that I post 5+ times a week and spend a majority of my time on it. But I think, I mean, you have a greater following than I do, and I've been following you for a while. And I just think it's super helpful. And you probably feel the same to get audiences on your podcast and be able to grow and become a voice. And I just think, yeah, you have to pick that platform for you and then grow it.
For sure. I completely agree with you on like I feel like it's so great to like build trust before you meet someone and then leverage it as like and like access to maybe like to like talk to whoever you want or like I'm sure like nowadays you like founders would like I'm like I don't even think you would have problem with like getting to talk to anyone but like in the first place, but obviously I feel like with a following definitely helps to like communicate the trust immediately so like people get back to you quicker and stuff. So I want to dive into like angel investing and syndicate. So obviously you have a really big syndicate, then you guys have like over 3,900 like LPs, and then you have raised over like 50 million on syndicate. That's a fun answer. I feel like that's
Yeah.
crazy. I wouldn't even be able to imagine just like gathering individuals to like come up with like that kind of number because it is a lot. So I wonder how do you actually get started on the syndicate side? And then obviously you guys have invested like Anduril, like SpaceX, like a lot of these like hot companies. Like maybe give us an overview on like I guess how does syndicate work in general on like a quick note side, but on the other hand, like how do you get deals like a SpaceX or Anduril to get people to invest in the first place?
Yeah. So to give people, I guess, some background about a syndicate versus a fund, a syndicate, it's a deal by deal basis. So you could think of it like almost a newsletter. So I go off, I get allocation in a deal. Let's just use Anduril, for example, because that was actually one that I sourced. I write up a deal memo. I send it out to the LPs. They'll get basically an email that says, hey, here's a deal. I'll write up a whole deal memo. Here's why we're excited about the deal. Here's what they're building. Here's where it could go. And then from there, people could actually go ahead and they can invest. They'll see the terms, obviously. So they'll see when we invested, the price that we're getting in at, any type of carry or management fees involved. Usually for syndicates, only carry because they're not really managing your money like a fund. A fund's different. Like we'll actually raise a certain amount of money. So we'll raise $25-50 million and then we'll deploy the capital for you. And usually there are management fees and carry involved in that, just given that we're actually managing the money, we have to pay salaries, etc. And so the way that I actually started angel investing and getting my first following was following different syndicates. And so AngelList, which is the platform we use, makes it really easy. You basically go on AngelList, you could look up different syndicates too if you want to invest. And you could be like, oh, I'm really interested in Web3, or I'm really interested in biotech or space or deep tech. And you could filter for those. And then you could filter for the amount of deals that different syndicates do, whether it's high, low, or medium. And then you could apply to different syndicates. So then the GPs of those syndicates will look at your application, accept you. Some are specific to different companies. Like there's a Uber alumni one. I think there's some school ones. There's now a whole other platform outside of AngelList that lets you invest. But so then the way that I did it was I was like, hey, my first investment actually was SpaceX individually through another syndicate, the $30 billion valuation. Now it's upwards and a lot higher. But at the time, that was kind of crazy to go ahead and invest. And so I put my first investment there. I just followed different syndicates and invested in specific companies that excited me and followed different syndicates that had a thesis that aligned with my view and what I was interested in. And so when I met Drew, he was like, you could actually start sourcing deals for my syndicate. And it's really interesting because then he goes ahead, I found the deal, he'd send it out to the syndicate, and then they would decide on a deal by deal basis if they wanted to invest. And so I joined him a year after he started the syndicate and was raising his first fund. And now we've grown it. We actually, I think 3,900 was an old number. I probably have to update on my LinkedIn. We're now at 4,700, invested in over 225 companies. And I think we deployed right around $60 million in capital. And so for one like Anduril, that was a little bit different because it was on the secondary market. AngelList actually doesn't allow you anymore to raise an SPV, to invest in another SPV or invest in another secondary. But let's just say, I'm trying to think of Beehive, because I love Beehive and love Tyler Dang. So that's a great example. Like, let's just say I was really close with Tyler and I wanted to invest. I go out to him, I'd be like, hey, Tyler, heard you might be raising around, or saw you just raised around 2 years ago. So you might be raising around soon. Would love to chat, would love what you're doing. Probably me personally, I think it's super important, especially if I'm going to go invest in founder, to actually know the company, do specific research, and write a very tailored message. And then he's like, oh, hey, Elana, would love to chat. Let's hop on a call. And so I'll hop on a call. I'll love what they're doing. Let's just say he's like, okay, yeah, we are raising another round. How much allocation do you think you could raise? And what's hard about an SPV is that you actually don't know how much you're going to raise. So you go and you're like, oh, sure, like I can maybe raise like 250K to 500K, but you never really know. And he's like, okay, that's awesome. That's great. Let's do it. And so I'll get all the information required. I'll write up a deal memo, write up the terms. And then I'll send basically an email out to the LPs, the 4,700 LPs, being like, here's the deal that we have. Invest if you're interested. It's basically like a one click. You press on it, you decide how much you're going to invest, then you go ahead and invest. And yeah, and then people decide. Then we pull all the money together and invest through one check. And so it's been super exciting because our fund is specific to Web3, but our syndicate could do any stage, any sector. So we have done Anduril, SpaceX, Liquid Death, and then we've also done early stage companies that now are becoming later stage. We've done like Alto IRA that allows you to invest in like alternative assets through your IRA account, which is also super exciting and actually correlates to AngelList. We've done AngelList itself as an investor. And so, yeah, we've done a ton of investments. And I think the exciting part is the minimum amount to invest for most SPVs is $1,000. And so if you're just like trying to dip your feet into startups, and if you're an accredited investor, then you could go ahead and do it through different syndicates, not needing hundreds of thousands of dollars that you might need for a fund.
For sure. I feel like quickly saying after the audience, hi Andrew. So he loves your conversation. He loves your masterclass, obviously. So I wonder when it comes to like, picking the deals. Obviously you mentioned some like really famous deals, and I wonder like how do you kind of decide on like which one would actually resonate with the audience? Like you said, like 250K to 500K. Like I feel like when I say to the founder, I feel like, oh God, I'm like gonna be on the hook for this. And like it's gonna be a lot of like I guess like marketing required at the very beginning. I don't know like how like I mean I'm sure like right now with like the 4,700 people, it's a lot easier for you guys to like raise something. But like when you first started, what was the journey like to grow it into like a really big syndicate? Like let's say at the very beginning, I think like 2 years ago or maybe 3 years ago, like I would get like a lot of LinkedIn DM to be like, "Hey, join my syndicate,"
Mhm.
from like random people.
I
But
was probably one of those people early
no,
on
no,
too.
no. Well, like I feel like it was like a trend. So like I feel like it's just like I wonder, is there like actually any rules on that? Like, can you marketing it like in a certain way? Because I know for like traditional venture, unless you're like six uh 605, I'm so sorry. Oh my God. 506C.
Mhm.
If unless you're like that, you can't really market your fund, right? Like how does syndicate work in that kind of like realm?
Okay, so same thing. You could actually raise a syndicate that is within that like 5060. I don't know what's actually called for syndicates, so that you could do a public raise. But usually with syndicates, you can't go ahead and be like, hey, I'm raising for Anduril. If you want to do it, apply to our syndicate and go. The thing that you can do, and there's a lot of gray lines here. So I'd say get some legal advice, but you can do like your syndicate as a whole, being like, hey, apply to our syndicate so you can see our deal flow, but like not doing any specific deals whatsoever. And so that's something that we've learned. But in order to grow ours, and what you'll see a lot of syndicates do is so like, what I would recommend is if you're like just starting off and you're like, hey, you want to go ahead and raise your own syndicate, get a really, really high profile deal if you could get allocation. So let's just say it is Anduril because everybody wants to invest in Anduril. You go ahead, you get Anduril, and then you go actually to different syndicates, and you could go on AngelList, reach out to different syndicate leads that a lot of people do and be like, hey, we're raising for Anduril. We have some additional allocation. Do you want to co-syndicate this out? And then we'll split carry. And it's not about the carry early on. It's about getting the LPs early on and getting really good deal flow. And so then the other syndicates will be like, oh yeah, that's awesome. I'll co-syndicate this out for you. Then they'll go ahead and they'll actually split carry on that. And so for us, that was really easy early on, especially in Web3, because we're known as more of a Web3 fund as well, is that people who want to get exposure Web3 are like, of course, I'll send this out to my LPs. They send it out to their LPs. Then when they invest, usually you get more LPs applying to your syndicate. So that's like an early on way to do it. And then we were just really well known in Web3. We started before kind of the hype. And so a lot of people want to get exposure there. And then from there, we've grown to frontier tech, deep tech. We've kind of done something in every single sector. But early on, I think it was super important to kind of have our own sector, our own niche, and then we've expanded from there.
For sure. I feel like since you're an expert, I want to like double click on like, oh, by the way, hi LinkedIn user. Also, you know what? Like today I even see like people on Facebook are engaging. I don't know who that is, but like obviously, hey, go you. So
Love that.
so I wonder when because normally I can only see like Twitter, LinkedIn, YouTube and stuff, but like today obviously like your content is like resonating, having a lot of far reach. And I wonder, so when you're picking, let's say, when you're collaborating with these other syndicate leads, like, do they kind of, is there like a some sort of like tag? Does Angelus have like a specific thing that can track who actually signed the LP, or like just everybody just gonna like split the carry
I
over?
Okay, I hope Angel is listening to this because I've sent them multiple emails. They have the worst visibility into co-syndicates. And so usually syndicates will do one of two things. It's like if you're a new syndicate, you split carry from the beginning because you barely have an LPs. You don't know how much you could raise, maybe friends and family. But if you're like a well-known syndicate like us and we're syndicating it out, there are two things that you do. One, you'd split from the beginning and be like, let's split 50-50. You send it out to your LPs, I'll send it out to mine. And you're just trying to grow and get more money in the door. Or let's just say it's a really high profile deal. I'll go out, I'll raise, let's just say 200K. And then from 200K, like some other syndicates either might ask or I might offer the syndicate deal, and then you split carry on dollars forward. And so even if you're going to send out another message, if you then get to 500K, you'll split carry on the 300K additional money raised. AngelList allows you to create unique links. And from there, you could actually see how an LP invested, like which link they used. But I find that really hard because right now, like the syndicates, a lot of people like will see the deal through one link, but then invest through another. And I think it's ridiculous to track through the link because so many of the AngelList LPs are part of so many different syndicates. So if they saw your message but ended up investing through another one, it's like, I think it just makes sense to split dollars forward. But one day I think AngelList will make it better to actually track syndicates, which one it came from, if they're in your syndicate, if they're not. But right now I think that's a miss on the platform overall.
Wow. Okay. So can't track. So
yeah. Long story short, can't try. Yeah.
So, yeah, because I feel like it would be great if like you can just like split a deal, like especially if it's like a really big ones to like a bunch of people. I think like what I thought was like super impressive about what you guys have done is like, people will actually like put in money because I think I was definitely considered like I like heard about like a certain company that's gonna raise and not gonna raise, but like someone's selling secondary to like this really famous company, and I thought about like doing a syndicate, but I feel like my biggest challenge was like, can I really find like a people invest like maybe 100K each or like to like $1 million on this like really mega deal, like, and I wonder like what's a kind of the general like average investment on the platform, and like for like let's call it like a really big deal like Andro, like that's like $1 million. I mean, I actually don't know what's your allocation, but like I would assume it's like really big. And like what's your kind of thought process on like, can we really take this? And then would you have to be in communication with the founder to be like, hey, we guarantee this will be like done, or like is there some sort of like
So I ran Andrew and I got the allocation. I think for there, I was actually buying secondary shares from somebody else. And so I think we started as like, yeah, give us 250K. We'll see how it does. We got 250K in the span of like a couple hours. And I was like, okay, shoot. And then two other syndicates asked if they could co-syndicate it out because it was such a hot deal. And I'm like, oh, sure. Like I could ask, see if we have additional allocation. We ended up raising a total of $1 million. But even for that one, we ended up bringing in 2 syndicate partners, which we probably didn't need because we were so oversubscribed. There was just no additional allocation. But right now, I'd say it is such an oversaturated market in terms of the syndicate. If you follow like 10 syndicates or the top ones on AngelList, you will see deal flow and messages like 10 times a day. I don't know if anybody listening has done the same or has followed any syndicates, but it's crazy. And I think a lot of people have struggled to actually raise capital for different syndicates. And so if you looked at this last year, a lot of the syndicates tend to go to secondaries. And even though the multiples on the liquidation of those secondaries wouldn't have been great, just a lot of LPs wanted the later stage. They wanted to get liquidity quicker. They thought that, okay, they wanted to be in like these well-known companies like the SpaceX, the Anduril, the Liquid Death. And so we were able to raise for those no problem. But then if you're in an early stage company and you would see a lot of syndicates, like you need some sort of signal to the LPs. You need some sort of tier one investor, product market fit, founder market fit. And so sometimes it's hard because we have these deals that we absolutely love the founder for. We think they're amazing. We love the company, but it will just not get the traction that we need in order to close it out. And for AngelList, they have fees involved to actually run the SPVs. And so you need to hit a minimum of 80K for any type of Web2 company. And then you need to hit 120K if they have any type of token to actually close out the SPVs. And so it's really hard because sometimes, yeah, we say to the founder, hey, we're super interested. We're going to allocate it out. And I'm just somebody who is like really on top of being like, you could tell pretty quickly if the deal's not going to move. Obviously, there's other factors, like you have your certain LPs that you can maybe message about a certain deal, or sometimes if it's a Web3 deal, we'll actually close out the SPV through our fund to hit the minimum. But a lot of times it's hard, and you're just being really transparent with everybody to tell them where it's at and where it's going.
Totally. Wow, that's such a great lessons. And quickly saying hi, Osama. So I wonder when you are thinking about like partnering, like I guess like not partnering, but like having actual fund as well as like having a syndicate, will you guys kind of like leverage syndicate as a full-on strategy, or like how do you think about like syndicates like partnership or like synergy with the actual fund?
So the fund is kind of our first, like we have an obligation to our LPs to invest in the best companies at the earliest stage in Web3. So anything pre-seed, seed, Web3 goes to the fund first. If it's too high of a valuation, if we decided that, hey, we just don't see the exit opportunity that would return the fund, then we'll look at it, or anything outside of Web3, then we'll look at from a syndicate perspective. So when we first started doing the syndicate, definitely like 50 to 75% of our deals were more Web3 focused. And as we raised our fund back in 2022, our syndicate has definitely expanded more into more of that frontier tech, deep tech space, because it's anything outside the fund. Now, if we have additional allocations, we let the LPs invest through the syndicate. And actually, all LPs in our fund get reduced carry for all syndicate deals, whether the fund has invested or not. So that's something that we do for LPs of the fund. But yeah, if it's like our obligation is the fund, and then the syndicate is kind of this other vehicle that we use for any type of additional allocation or anything outside of our thesis.
For sure. What is your, I don't know if you're comfortable talking about this, but like what's the portfolio construction now kind of look like for your fund? And then like how do you think about like, from like how much to save for follow on and then how much to save for like the just like the first round of like everything? And then in terms of like follow on, like what's your thought process on like picking which one? Are you one of the investors who will pick everyone, whoever raises second round, like will put in some money, or like what's a kind of like thought process on that part?
So originally for Fund One, we were going to leave 10% for reserves. And then we realized kind of quickly on that we should use the SPV for follow-ons and take more shots at bat from our first fund, just given that it was a $25 million fund. We want to make sure that kind of we hit all the companies that we wanted to. And then also within the fund, we actually have an accelerator too that helps companies build out their token from the ground up. And so we're investing 100K to get 4% equity, 4% token. And so we want to make sure that we're investing in a lot of our accelerator companies. And so the SPVs allow us to invest in later stage companies that we invested in through the fund that we don't necessarily have any reserve capital for in Fund One. And so that's what we use the SPV for as well. And so if any of the LPs want to follow on to any of the companies that we actually did from the fund, then they can invest. And we're also happy. We have a ton of GPs in our kind of fund. So if they want to invest in any companies or meet with any of the founders for their own fund, then we always are happy to make the intros as well, because I think it just helps everybody. It helps the fund. It also helps the portfolio companies. So yeah, happy to do that.
For sure. How do you think about like, I guess like you just mentioned about like, 4% for equity, 4% for token. Like obviously I feel like this is very different than like, let's say if it's like a traditional startup that just have no token, obviously. But what's a thought process on like, how many companies you invest in to actually make the money back? Because I feel like there's like two school of thoughts. Like one school of thoughts is like the high conviction, heavy bet on something, and then there's like the people that are like spray and pray to a degree.
Mhm.
And I would say like for yeah, like which school of thoughts do you think is better for like the pre-seed stage? And especially I actually also don't know what's a token component into this. Like
Mhm.
maybe will there be company that are like actually not very venture backable, but also like, but if they issue token, this would be amazing. Like, I
Mhm.
wonder what's the thought process on like how many company you should invest in, and then like what's kind of like the ownership that, well, you just mentioned like obviously 4% of the
So that's specific to our accelerator, and they're going through our cohort. We're helping them build out the token from the ground up. We're investing 100K for 4% equity, 4% token. And those we hope to invest. I mean, obviously in our next fund, we want to invest in close to 100 right now as we're closing out Fund One. We're definitely doing a little bit less. We're probably going to have right around 20 accelerator companies. And if one of those tokens takes off, then that could really pay back our whole fund. So we see it as a huge advantage. And then also through our accelerator, we're actually helping them build it out. We're creating utility. We're working with market makers. And so that's kind of really important aspect of our fund, especially as you've seen Web3 have this pretty quick liquidity given the tokens. And so from fund one, we've invested anywhere from 100K, like as a smaller check, upwards of $1 million plus. And so our average check is right around 500K to invest in 50 companies for a $25 million fund. But I've seen both. I've seen funds that's a $10 million fund, invest 100K in every single company, won't go up, won't go down, and that's what they do. And I probably works out for them. And I think that's the best part about venture is everybody has their own way. For us specifically, I mean, we're investing pre-seed seed. We did a tiny bit of Series A as well, but mostly pre-seed seed. And we need to be able to pay back the fund. And so we did do some very high conviction bets in companies that we've been following for a while. And for us, it was really important to do that because every single investment we made, we needed to be able to pay back the fund. And so we needed to think about, okay, if we're investing at this valuation, given the check size in our ownership and where we see the exit potential, will this pay back the fund or won't it pay back the fund? And that's how we kind of made our bets mixed with, hey, have we been actually following this founder for a while? Where do we see it going? And so I think for us specifically, and I only want to talk about me because I think everybody does it differently. There's somebody that I really look up to in the space that does 100K, but it was super important to have those specific companies that we did those high conviction bets for.
Totally. I wonder, first of all, like I really like what you said about like, every font is different and then like everything could potentially work out if you like play your cards or like leverage your strengths. I wonder when it comes to like thinking about, I wouldn't say like fight over like the hot deals or like, there's AI company that like in the seed round is valued at like 100 million. So what's your thought process on like the valuation side of things? Also, I mean, I have a follow-on question, but like I don't want to overwhelm you with like 75 questions in a row.
Yeah. So valuations, I think it just depends on every specific deal. I'd say we're definitely valuation cautious, especially in our fund. Syndicate's just a little bit different because a lot of the LPs I've found, especially in this last year or so, when a lot of people don't have the liquidity, they don't mind as much as a valuation as much as a round and when they actually think they're going to see liquidity. And so from a syndicate perspective, it doesn't matter as much. For the fund, we definitely have a certain number kind of internally that we don't want to invest in top of in each stage. And that kind of just depends on the deal, if they have a token, how we're thinking about that. But from the syndicate perspective, it's a little bit different. Obviously, you've seen a lot of syndicates do secondaries and do these kind of very well-known companies at valuations that just don't make sense. Like even if they go public, there is just no chance that they're going to be able to actually give back the capital for the valuation that they invested at. And so we're definitely looking at that. I feel pretty strongly that like we have an obligation to the syndicate LPs just as much as the fund LPs to invest in the best companies. And we don't want to go ahead and give them deals just because it's a hot, well-known company that we just don't see being able to take our carry share, a lot of the secondaries on the SPV side will also take management fees and then give back capital back to LPs. It's just very hard to do that in some of the valuations that you're seeing.
For sure. Do you have to guarantee like at a certain stage that you have to liquidate a certain syndicate deals? Or I don't really know what's a like exit strategy for like a lot of syndicate deals.
Yeah, so it's up to us. I'd say with us, we've actually been able to give back some DPI, just given that we've invested in companies that have a token. And I'd say it's one of our kind of biggest powers as a syndicate and also fund. And the best part about syndicate, especially as a GP of a syndicate, is it's deal by deal. So we don't have to pay back the whole entire 60 whatever $1 million that we've deployed in order to finally have a carry hit. We have a deal that I actually sourced, one of my first deals I ever sourced. We sent back some money. We sold the token about 10%, sent back money back to investors. We sold an additional percent this last quarter, sending money back, and officially carry's hitting, and we're getting kind of multiple on our investment. And we continue to hold close to like 75% of the token. And so from there, we were able to give back a percent to the investors, carry hit, and they're getting DPI. And so that's kind of what I see as such a big advantage to having this kind of both the Web3 strategy and the Web2, but finally we're able to give back LPs some capital that they're not seeing in the normal kind of Web2 syndicates that they've been investing in.
Wow. I feel like I completely feel like I underestimate like how much like issuing a token as well as like the like different like fund tokenomics or like just the economics for like Web3 company, I feel like because I feel like coming from the NFT era, people were just like trading and selling a picture. So
Yeah.
it's very easy to like seeing just only like the superficial side of things. But um I wonder when it comes to um writing a deal memo, how do you, I guess, put together a deal memo quickly, and like what should be goes into a successful deal memo? I feel like it kind of varies because I also subscribe to some syndicates. Some are very detailed, like, okay, here's like what we're seeing, like who else is investing, and a lot of marketing material, but rarely I'll see like actually here's like very, very detailed economics component. I wonder what's your thought process on like what should goes on like a good deal memo?
Yeah, so your deal memo is the touch point to LPs. So it's really important to have some very like good information there. And the way it works is usually I'll have a first call. I'll like the deal. I'll either bring on other team members for a second call, do due diligence, talk to customers, talk to other VCs, whatever the case may be. Finally, when we decide, hey, we're going to invest, I send them on an Airtable link that kind of gets that majority of information, the round size, what round it is, for AngelList, you need all of kind of where are they headquartered, what's their legal name, how are they structured, and then I kind of get into other information. So like, what do they actually do and why is it important? What are the other competitors? Where do they see an exit happening in the space? What's their TAM? And a lot of this is in the deck too. So if it is, don't make them repeat it. Once I have all this information, I also have fireflies go into all my meetings and taking AI notes, but I also love writing my own notes as well. Then we'll kind of put together a deal memo based on all that. And it's like, okay, the first thing that we do is we write a summary. What's the company? Why is it important? What problem are they solving? What's their solution to the problem? We'll include any type of competitors and what's their competitive advantage. I think it's super important right now to also have the exit strategy, just given that so many of these companies aren't having exits. So have other companies in their space actually exited? If so, what was the valuation on that and how do they compare? Or where do they actually see it? Are they doing M&As? Do they have any type of M&A conversations that they could actually disclose? Maybe they didn't move forward with it, but they have some conversations. Do they see themselves going IPO? And if so, how long? And whatever the case may be, I think it's really important to have that. The market is super important as well, any type of business model. So how are they making business? Who are their customers? Who are their partnerships? Where do they see it going? Really important to dive into the numbers, especially with the founder, because a lot of times it's just a PowerPoint deck that just shows kind of next year they think they're going to 5x their revenue. Well, how are they going to have that? Do they have LOIs? Where are they at with the LOI process? Are they closing out the deals? So I think jumping into that too, I'm probably missing a couple other kind of sectors, but I think those are kind of the main ones that I tend to focus on, jump in. And I think people want to see why you're excited about the deal. But as I mentioned, a lot of syndicates, LPs that are looking to invest do love some sort of signal. So who are their co-investors? What were their top investments and what did they invest in? Who's the founder and why is he going to actually solve the problem? And then what's their product market fit and how do they fit into the overall vision of the company?
For sure. I like what you said about like, collecting the information you can, and then also like having your own take on if something would take off. And I wonder when it comes to like how much of the, I guess, like since you have done so many like over 200 syndicate, what do you think works beyond the like who is who invested in XYZ, or like are they like a famous company? For the companies that are like kind of regular startup vibe, how do you think about like the diligence side of things? Since I feel like there's a lot to do to even fact check like with the customer, with like the other investor. How do you make sure that like the information that you received are kind of diligenced?
So we actually also have a legal and accounting team. And so for any deal that we're going to do, we make sure to loop in our legal, have them review the docs, have them review kind of all the information they sent. And then from a numbers perspective and accounting perspective, then we have our accountant too that kind of jumps in as well, reviews the deal, like confirms kind of everything makes sense. The truth of the matter is there, no matter what deal you're doing, whether it's later stage, early stage, like I can never say 101% chance, but we could do everything we can do as a venture capital firm to make sure that that is as low as possible. Look at everything. And I could say with certainty that like I trust the company that we're actually going ahead and investing in.
I like that you guys have like a full-on team to do the legal diligence as well as like from the financial side of things.
Yeah, I'd say for a small firm, we are so good at who we've hired. And that's because actually of our accelerator. So unlike a normal venture firm that has $25 million fund, we charge no management fees for any of our syndicate deals. The way that we pay for those kind of additional team members as well, we have a head of token, head of BD, partnerships team, marketing, and that's all from our accelerator side. And so it's allowed us to grow out this team that we would have never had elsewise.
I like that. I wonder, okay, so maybe this is like a sensitive topic, but like, you know, from like the early stage perspective, like half of the startup just die. Like, if something that didn't really pan out as it could, like what's a ramp up process for the investors?
Ramp up in terms of what exactly?
Like, I guess like how do you just tell the investor, hey, I know that you invest in blah 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 deal, but unfortunately this startup like, you know, could not raise
Okay.
for a lot of funding. Like, how do you kind of like do you tell investor deal by deal, or like if some company that are just like kind of like paused, so like for example they didn't grow as big as like a venture scale company but they're like lifestyle business now, like they are making some money but it's like not great enough to like distribute back to the universe, like I guess like how do you kind of do the mid tier or like the company that just died to like the investors?
So you could only control what you could control. And I think people who are investing in startups need to know that 9 out of 10 startups are going to fail. So already there's a risk that you go in and you're like, hey, majority of your money you're not going to get back. And we've had a lot of people who have actually invested in startups being like, oh, can I have liquidity from my investment or can I sell my portion? And it's like, no, especially when you invest in an SPV, you're stuck in that investment until the SPV decides to liquidate or until there's a liquidation event. And so, yeah, I would be lying if I said that we haven't had some zeros, some of which have been really aggravating. And for us, I think honesty and visibility into what happened with the deal is the best that we could do. And so, one specifically, the founders had an issue. And you actually see, I forget that exact percentage, but I'm pretty sure it's like 80+% is because of founder issues. And that's exactly what happened here, where they just could not work together. They couldn't make any decisions. And in turn, they couldn't actually deploy their product that they were building. And this one was really aggravating because it was one that I found I'd have been following for a while. I love what they're building. They just couldn't agree on it. And so we need to make sure that as a fund that we show visibility into, hey, what happened here? What could we do better when we're actually going ahead and investing a deal? And how can we make sure that we could solve this in the future? And so there's only so much that you could see behind closed doors as a venture capital firm. But I think it's important to meet all your founders in person and get the ability to actually connect with them, talk to them, ask them questions. I think it's also important to have calls when possible to jump into their founder dynamic, how they met, why they're building it, why they both think that they're best or the problem. And so there is no 100% certainty in any single startup. And if there was, somebody please tell me how you know for certain which companies to invest in. But I think you could only control what you could control. And it's super important to do the diligence that you can do. And yeah, you're going to have zeros. And any single investor, I'd be lying if I said, if you invest in us, you're not going to have any zeros and you're only going to have positive upside. But we do as much diligence as we possibly can for each deal. And we control what we could control. And there will be zeros, but I'm hoping that the positives outweigh the negatives.
For sure. I'm surprised that like you know like 80% are founder dynamics.
Mm-hmm.
I wonder when you are thinking about, I guess, like the investor updates, do you like also have you ever encountered, maybe this is like also another like things that are sensitive to talk about. I always imagine if like I have a syndicate and then what if like this deal was dead and then like someone came over and be like, hey, return my money.
Mm-hmm.
Have this happened to you, or like not you but like people that you know in the syndicate world, like if you're dealing with like a crazy LP or just people who doesn't understand what's going on,
Yeah.
what would be like the thought process on handling difficult situation when they kind of occur?
Yeah. So first off, I'm not sure if it's 70%, but I'll look that up and maybe it's 50%. But it's like how many divorces are there in the US? Probably similar to
Right.
founder dynamics and founder breakups.
I feel
Um, in terms of dealing with fun, I'll give you one example that's super funny actually. We invest in a company, crypto bear market hit. I got a couple messages being like, "Hey, I want to sell my portion. I don't want to invest in this company. I'll sell for a discount, blah, blah, blah." AngelList doesn't allow you to do that. And so we couldn't sell it. Like, even if we had a seller, it's really hard to actually go ahead and transfer the ownership. Nor when you're investing in a startup, you have to know that's kind of tied up. And it's funny because now that's actually the company that we liquidated and had a big markup for, and we were able to give back their investment plus an additional whatever, and we still own 75% of the token. And so it's one like that where I think LPs, at least now, and I think a lot of LPs who have invested in other syndicates know that their money is tied up for a certain amount of time until they're actually no, for the person who just asked, it was not FTX. It was actually a company that we fully sold. It's a good company. It's live right now on market. Um, but it allowed us to actually get back a portion. So yeah, you're gonna have hard LPs, especially in a syndicate that has 4,700. I promise you that I've definitely had some hard conversation, hard LPs. I think it's also hard because there are some companies that we could just not get updates for. Like no matter what happens, they're either really heads down building
Mhm.
or honestly, like, yeah, they're heads down building. They don't want to give updates to small investors, or if they're later stage, a lot of times they won't give us updates because it's so confidential. So we have a lot of people messaging us, "Hey, provide us an update. What's happening here? What's happening?" And we're like, we could only give you all the information that we possibly have. And as much as we try to get the information the most up to date, it's only so much that we could get on our end as well. But I think a lot of LPs, the last thing that we've kind of seen at least some issues for is if we invest in equity and token, the token's live. A lot of LPs want those tokens and want to be able to actually manage them, decide when to sell. And a lot of funds will be able to do this for their tokens, especially I've seen funds that invested early on in Solana and they're able to actually go ahead and give that Solana specific token back to the investors. In Syndicate, it's just not the same and it's a lot harder to do on AngelList. And so that's something that we've had to really just articulate to the LPs in the syndicates as well.
Wow. I feel like you have done a lot. I feel like I could not. I feel like for like a regular person who's managing like 99 LPs for a fund, that's like a lot. But like I feel like managing individual LPs, I was just assumed that's like just gonna be crazy because people would DM you all kind of crazy stuff. I'm like so impressed by how you can handle 4,700 LPs. I like it's insane.
Not all of them message me, so that's okay. But for the ones that do, I try to get back to all of them. There are obviously some that are missed. I mean, I get a ton of messages, but do what I can as a kind of partner at a fund and managing the syndicate.
Yeah, it's insane, I would assume. You briefly mentioned about like, there will be like deals that like you just got like absolutely no update.
Mhm.
Um, what's your process on like actually collecting like feedback or like updates of like the 200 plus deals that you have done? Because I feel like collecting like 10 deals, that's like easy, but like 200 deals, that's just like, oh God, like a lot of work. And then every month they have to like, I guess like some people would send like an LP update or like, not LP update, but like investor update to
Mhm.
the investors. But like a lot of people are just, I guess like not ghost, but like they just probably don't tell you what's going on unless you ask them.
Mhm.
What's your process on like tracking down, I would call it like the people who are like gone, basically?
So for our fund investments, we try to catch up with them at least once a month, if not once a quarter. And if we can't have a catch up or they're too busy, then we make sure to at least get the information required to kind of get an update on what's going on, how we could help them, where they're at with the company. For syndicates, a little bit harder. Any single update that we get, for the most part, I'd say, as long as we get approval that we can send it to the syndicate or that we've received, we'll send out to the investors. And so they'll get any update that we get, we'll send out to them, let them know what's happening. But for the ones that we don't, it's hard. Like you try to reach out to them, get updates. Some of them we invested 80K in. And so they're like, hey, we're a Series B company now. We don't really need to tell you guys everything going on. And a lot of companies, at least lately I've seen, and I'm curious if any other venture capitalists have seen this too, but a lot of people don't want to share the updates, not because they don't want to make time for it, but because that they don't want it getting out to competitors. And so that's something interesting to manage, especially with the syndicate. So if we're close to the founder, or even if we get an update and we're like, hey, we're going to send this out to the syndicate and they don't want us to, obviously have to respect that. And if people go and message us being like, hey, we haven't received an update in a while, then we'll try to actually go ahead and summarize what we received. But yeah, we're seeing that too. And that's really hard to manage because these LPs invested in the deal, even though it was through Redbeard, they invested. And so they want to be able to see and have visibility into how the company's doing. And so I wish there was a good answer for this, but we do what we could do. We get updates when we receive them. And then if we haven't gotten an update in a while, we also use Affinity. So we're able to track the last kind of touch point we have with the founder as well. And if we haven't had one in a while, then we make sure to kind of catch up with them. And we do what we could do on that end.
Yeah, for sure. I can imagine that, like, there will be like a lot of people fear of like competitors getting their memos and like their numbers. It is like very hard to manage because you don't really know, like, maybe this LP is like working at a competitor potentially. Like anything is kind of possible these days. Speaking of, like, I mean, I feel like you have done such a great like masterclass on your YouTube channel. Like, people should check it out. It's a live you've done. I really love that session. And I really like your openness about like, building a community, building like your own network in LA, as well as like the CRM you're using, like just in terms of like basically sharing with us the kind of like the process. And I wonder, since you mentioned Affinity, I wonder like what are some other tools that you're using, and then we'll dive into the community building, because I feel like you've done such a great job on like branding yourself, building your own like orbit, and like just like networking and everything. Like okay, so let's start with, I guess, the tools first.
Yeah, so we use Affinity to track different deals. So all of our deal flows in Affinity, all our kind of LPs for our fundraising are in there, all our partnerships are in there, all of our venture partner network is in there. So that's our first tool that we use. I personally like Airtable better. Me and Drew, the founding partner, have gone back and forth on this because Airtable, unless you kind of do a plugin, doesn't usually track emails and your last touch point. I personally think Airtable is so much cleaner. I have actually a tool that goes ahead, and I could go on any LinkedIn profile, press add to Airtable, and it will actually grab their profile. And then I have it mapped to like their name, their email, if they had it, their company. It will bring in their notes section. And so I find it a lot better, but people have their preference between Airtable and Affinity. We use Notion now, especially for our investor updates and also our data room for our fund. We use AngelList for any SPVs and fund admin. We use Fireblocks to hold all our tokens for our fund. We use Slack as our team community. I'm getting into kind of all our tools, not just CRMs. But yeah, in case you're wondering what the Redbeard toolkit is, happy to help in any way. So yeah, we use a lot. But I think Affinity is great for deal flow. And so is Airtable. Everybody has their own kind of one that they like better, I feel like.
You mentioned a tool that's like basically extract your LinkedIn information to Airtable. Is that like, did you connect them with Zapier, or like how do you kind of?
So you actually didn't need to. If you have Airtable Plus, or even back in the day, you could do one external plugin through Airtable, and this specific one, and I could send you the name or try to look for it later. It's like an actual LinkedIn plugin. And so all it is I wish I could share my screen, but it's like a button, and then you just hit it and it brings in everything. And so it's really easy. So if I'm on a new networking call and I have a whole Elana CRM that tells me kind of everybody in my network, I could go ahead on your profile, press it, and then I'll like add in my notes, but then I could see like even brings in your location. So I host a lot of events in LA or even New York or SF, and it's like, hey, if I see that you're now based here, I could go ahead and invite you to my event, and I all base it on my CRM.
Wow, you're such a pro. Like, I hear about this from your masterclass. I'm like, I feel like you're basically a spokesperson for Airtable and that thing, and then I feel like Airtable should totally sponsor you for that. And
I'll reach out to them. No.
So send them this segment of the podcast. Yeah. And I feel like, yeah, like I feel like I'm just like not very good with tools, and that's something I'm definitely trying to get better at. And I wonder, so obviously you have hosted like pickleballs in LA. Like, what is it like for you to like diving into a new network and like actually making a name for yourself, as well as you briefly mentioned about like, you know, how you got great deal flow is from like sending other people great deal flows. And maybe we could also tap into that a little bit on like, you know, how do you kind of convert some of the obviously great network into a, from like the deal flow perspective, how do you send people, who do you send, and like what if they don't send anything back? So yeah.
Yeah. So to start off, I moved to LA 4 years ago. Didn't know anybody. Moved here with my now husband. And so I think for me, it was really important. I kind of mentioned this early on the call, but
Mhm,
when I was first trying to get into venture and I was really deep in the Web3 space,
mhm,
I was going to every single event. And I'm an introverted extrovert. Like I need my time alone, need a recharge. And then everybody looks at me, they're like, you're an extrovert. I'm like, yeah, but I need my alone time too. Like
mhm,
I definitely need my time, my own space. And so I'd say whether you're in the field that you want to be in or you want to get into another field, the only way you're going to do that is by putting yourself out there.
mhm,
And it's like every single opportunity you get, say yes, yes, yes. And then it came to a point where I remember I went to a cafe with my husband and we wrote down like every single opportunity I had in front of me. And I was in Web3. There were so many opportunities in Web3. I was ghostwriting, being a venture partner, like you name it. I probably had some opportunity that came up that allowed me to do it. And I was like, okay, now you finally got to a point and you're like, what do I actually want to do? And I think that's everybody's goal, right? Is to have their choice over their career, over their life, and over what they want to do. And that's only going to happen based on the network that you make. And I think I've heard so much like this is a hard market to get a job, but I believe that you're not going to get the full, probably, hey, it's worked out for some people. It's why LinkedIn jobs is a thing, but it will be so much harder to get a job through a random cold message on LinkedIn than it is whether to even write a tailored message to people who already have the job or to meet people out and about or even meet people by cold DMing them. And I think that just gets your foot in the door that you might not have if you're just applying randomly to a job. And so I think that's really important for people to notice. It's like, hey, put yourself out there, even if it's uncomfortable, and make yourself uncomfortable in that situation. And then I forget when I first did my first pickleball event. We're actually investors in Texas Ranchers, which is like Major League Pickleball. But I think even before we became investors, I was like, I hate getting stuck at a dinner where I'm just like, okay, I want to leave so bad. You can't leave. You're stuck at a dinner. People next to me I've already spoken to for an hour or two. I need to head out. And so I'm like, how can I? And I love activities. I'm love doing that in my free time. So I'm like, how can I create an event where people, first off, don't feel stuck, can meet a ton of people. And pickleball is so easy to learn. So I started doing these events and I've done, I think, close to 10, partner with a ton of different sponsors, and it's all for founders and investors. So if you're in LA, going to be here for LA Tech Week, let me know. I currently have like 200 RCPs I still need to go through, but happy to extend it to somebody, some of the listeners. But yeah, I think it just allows me to be a name. Some people were like, oh yeah, you're the one who hosts a pickleball event for founders and investors. And it does twofolds. It allows my name. Yeah, it allows me to get out there. It allows me to play a sport at 4 p.m. Sorry to founders who have to go ahead and go at 4 p.m. to this pickleball event. But then it also just allows me to meet new people. And I've sourced some of my syndicate deals from the founders I've met at these events. And so I think getting your name out there is really important, and then building a community. I think like Valentina from Wonder does a great job at that too. She hosts different kind of activities and all events through All Rays, and there's a couple other kind of people who do them in LA. And I just think it's important to create a name for yourself regardless of where you are. And sometimes it's uncomfortable, but then it becomes comfortable after a while.
For sure. I feel like I have so much respect that you could actually organizing sports even, because I'm like, I don't know. Like I would like think so much about, oh, do I put on makeup to like go to a sports event? And then what if I'm stuck at the sport? And like, I don't know. I have so much.
So we have like the beginner realm where like people who have never played or aren't that good go to the first two courts, and then the other people go to the end. Every single person messages me, and I've gotten invited to so many pickleball stuff being like, Elana, you play pickle, come play with us. I'm like, guys, I'm not good. Let me just make that clear. I play tennis. I'm pretty good at tennis. I'm an athlete. I am just not the best. I have days where it's like I am not even professional. I'm probably like a 3-0, like pretty good, could hit around. Or there's some days, and I feel like it happens at every single one of my events, that I just can't play for the life of me. Maybe I'm just like, my head's everywhere. I'm trying to make sure everybody's happy. I'm looking around, but yeah, don't invite me to your pickleball tournament. I won't be good.
Amazing. Well, okay, so we're at the last part of the interview. I want to end with like a quick fire round. So, what's your favorite book?
Ooh, Ready Player One probably was the one
Oh.
that sticks out to me the most, but you probably heard that a lot, but I'll go with that one.
Who would invite to your dinner party?
Ooh, I love Nicole Wishoff. She's come on my podcast, and I think she's awesome. So I'll invite Nicole.
Uh, who made the biggest impact in your career?
Probably my founding partner, Drew. I think I was sourcing deals for him and doing the job, but he took a shot on me early on, and I wouldn't be where I'm at without him.
Where can we find you outside of work?
Ooh, playing tennis or at Megaformer.
Amazing. Well, okay. Elana, thank you so much for coming on the show today. Where can people find you?
Yeah, find me on LinkedIn under Elana Gold. I post a lot on there. I'm also on Twitter under It's Elana Gold, also on Instagram under It's Elana Gold. So find me anywhere. And then if you want to join our syndicate and apply to join, I'm happy to kind of share that links in the comment section too.
Amazing. Thank you so much again for coming on the show today.
Thank you. Thanks for having me. This is awesome.
Okay, let me quickly end stream.